At a recent press conference, Mark Carney, the Governor of the Bank of England, said that the last decade ended with a whimper rather than a bang. 2019 was a poor year for the UK economy, for fairly obvious reasons. You saw a slowdown in the rate of growth of the Eurozone. There was a hit to global manufacturing trade, to the car industry, and that affected Germany especially badly. So half of our exports go to the Eurozone. That was a drag on growth in the UK. The other problem was quite obviously the issue of Brexit, the political confusion that was associated with that, the various forced deadlines for Brexit, and that hit investment in the UK economy, hit business spending. So those two things led to a slowdown in growth as you went through last year, to the extent by the time you got to the end of the year, to the fourth quarter, there was no growth in the UK economy at all. There is a hope now that we're starting with a blank sheet of paper, a new start. The election in December overcome the political uncertainty, and immediately that result came out. It was obvious that we would have a January 31st Brexit. And there was always the expectation that once the political uncertainty was resolved and the Brexit uncertainty was resolved, we would get a bounce in growth in the economy. That to some extent has happened. If you look at the surveys for January, the service sector survey was a good deal stronger, manufacturing less so, bit of a bounce in the construction survey. So things are looking better in the first quarter than they did in the fourth quarter. How much better is a contentious issue. The Boris bounce, as it's been colloquially called, looks like it may be a fairly limited one. What the Bank of England are looking for is an increase in GDP in the first quarter of about 0.2. And that's roughly the market consensus as well. So it's not a huge increase in growth, but something better. The problem looking through the coming year is that there's still a good deal of uncertainty. The uncertainty about Brexit has been replaced by the uncertainty about the type of trade relationship we will have with the EU at the end of the transition period going into next year. And that is very much up for grabs. We know that the negotiating position of the UK and the EU are far apart on trade, on financial services, and the issue of equivalence and the way in which financial industries may trade into Europe. So there's going to be a year of tense and difficult negotiations with an uncertain outcome. But in a sense, there's a more fundamental problem than that. What the Bank of England said in its last monetary policy report is that the trend rate of growth in the economy at the moment is no more than 1%. Just for this year and going into the next couple of years. That is an extremely low bar. That trend rate of growth of the economy is determined by rate of increase of the labour supply and increase in productivity. But if we can only grow by 1% before we start to run into capacity constraints, that means the outlook for the coming year and for years after is a relatively grim one. The big challenge for the new Johnson government is not so much Brexit. The big challenge is raising that trend rate of growth. The budget on March 11th may give some clues as to how the government may achieve that with infrastructure spending, which would be a useful boost to productivity growth in the UK. But what we need to see is a set of policies from the current government which increase business investment, increase skills and training of the labour force, improve transportation infrastructure, and boost the trend rate of growth and productivity in the UK. If we don't get that boost to the trend rate of growth, if we don't get that boost to investment and productivity, then whatever happens at the end of the year on the Brexit settlement, we're still looking at a fairly low growth, subdued, really depressed style of economy. So a challenge for the government, transform the outlook, raise the trend rate of growth. Very difficult one to achieve.